Hi, this is Lilia Kirilenko, and we are continuing to talk about IFRS 9. And right now we're going to talk about derecognition and how it is tested in SBR. I've noticed that people completely ignore this very topic. And IFRS 9 tells us that a financial asset, like for example investment in shares, investment in debt like bonds purchased, or accounts receivable, is going to be derecognized when the contractual rights to the cash flows have expired. So for example, you had accounts receivable, you haven't received the pay, and also the legislation in your very country says that you can't claim for something that is 3 years overdue, then you have to derecognize it. Or when the asset has been transferred and the entity no longer has control over it. So this means that it neither retains all risks and rewards, nor transfers substantially all of them while retaining control. And the thing that is going to be tested the most frequently is this risk and reward assessment. And this means that we need to challenge the scenario for each and every type of risk. Most frequently, this very topic is going to be tested when a company sells some factors to some factoring company their accounts receivable. And we're going to look at the risk of non-payment. So is it factoring with the recourse when the company will have to substitute the bank if they haven't received the money from the customer? And in this case, the risk of non-payment has not been transferred, so the financial asset is not derecognized. And we're also going to look at the risk of slow payment. So for example, if the bank charges our company some interest if it takes it longer to get the money, then it's us who bears the risk of slow payment. Of course, there could be other questions. So for example, it could have been that we gave someone our shares, and the shares were given, let's say, for a period of 2 years, and then we're going to have a look who gets the dividend from those very shares. What happens in the end? Do we repurchase them at some predetermined amount or at market value, and as such bear the risk of changes in market value, and so on. So pay attention to this topic because it is tested every once in a while. And you need to be prepared how to challenge the scenario, each and every part of it, to get marks. And I will see you next in our podcast, SBR Made Easy with Lilia Kirilenko. Bye!